Hi, I'm Joseph Berardo. At MagnaCare, we believe that all citizens need to be informed about the healthcare issues that affect their lives. That's why we're proud to support the programming produced by the Caucus Educational Corporation and their partners in public television.
Tackling our finances next on Caucus, New Jersey.
Funding for this edition of Caucus, New Jersey has been provided by New Jersey's credit unions, banking you can trust, Felician College, Virtua, NJM, auto insurance, homeowners insurance, and more, with a focus on safety and financial stability. Horizon Blue Cross Blue Shield of New Jersey, community education centers, and by New Jersey Sharing Network, dedicated to saving lives through organ and tissue donation. Promotional support provided by the Star Ledger, powering NJ.com, and by the New Jersey Business and Industry Association and its monthly magazine, New Jersey Business.
Welcome to Caucus, New Jersey. I'm Steve Adubato. You know, during these very uncertain economic times, many are facing extraordinary financial challenges. Here in the studio to help us get our finances under control, we have Michael Drulis, Executive Director of the New Jersey Coalition for Financial Education; Lourdes Cortez, President and Chief Executive Officer of the North Jersey Federal Credit Union; Kim Cole, Education Outreach Coordinator at Nova Debt; and finally, Bill Klinger, Associate Professor of Business at Raritan Valley Community College. I want to thank all of you for joining us. We have to get our finances under control, do we not? By the way, throughout this program, you're going to see some very important websites that will help you get your finances under control. By the way, how many Americans do you think watching this show, at least on the East Coast watching us, what percentage do you think do not have their finances under control? What do you think?
I would say quite a few. I don't know exactly what the percentage.
You think it's close to half of the people watching are saying?
More than half.
No.
Yeah, I think so.
You think more than half the people watching are saying, Terry, our floor manager, been with me 20 years, you're going like this, because you're included, I know. And you're saying yes. Do you think most people watching are saying, I don't have my finances under control?
Absolutely.
Because?
Well, with the economy. I mean, I think with the downturn in the economy, it really hasn't helped the consumer. And I think that from my perspective, from a financial institution, I think we haven't done a real good job in trying to really promote the products and services that we can offer to, you know, help them create a budget, see where their spending habits are.
Is the budget the thing? Is that really the? Is that really the thing? So many people are. Well, I see people smiling right here. So is the biggest reason why so many people do not have their finances under control is because they don't have a budget? You're saying no already?
Yeah, I know my panelists here will disagree with me, but it's difficult to keep a budget. I mean, we've all tried maybe at some point, and it's the textbook way to do it, but it's very difficult to implement, and it takes a lot of discipline, and most people don't do it.
But that doesn't mean it's not important.
Well, there's other ways. There's another way to do it, I think. And on a show that a panel you had in March, they talked about pay yourself first.
Mm-hmm.
That means you watch our show on a regular basis?
Oh, all the time.
You are clearly a very aware viewer of public broadcasting. Go ahead. So we said pay yourself first.
Right. So the idea is when you get that paycheck, put that money aside for yourself first. Automatically have it deducted, put it in the bank or your credit union, or write yourself a check.
5%, 2%, 10, what?
You should be thinking at least 10%. At least 10%.
At least 10.
If you want to be, current people are talking now 15%, 20% if you really want to be happy.
Well, how does that throw out the budget? I don't understand.
Then if you can live within, you set that money aside and live within whatever you have left. Right?
But in order to do that, though, you need to look at where you're spending your money.
Which is a budget.
Yeah, well, you know, a lot of people, yeah, I think the word budget has a negative connotation.
Does it freak people out?
Yeah, I think so. I think that maybe if you called it, Kimberly and I were talking about
another
earlier.
Word for budget?
Yeah, like
spending plan.
Yeah, spending plan, debt-free
What's in the
plan.
name? Let me ask you something. You've told our producers that there are three basic things we need to have this spending plan. Some people call it the other thing, the B word I'm not going to use. What do you think we need? put it together?
You got to start with your priorities. What's important to you? To your original question, people today are more in control of their retirement and their finances than ever before. It's been turned over to us to determine where we're going to be and how we're going to get there. And we want to take our priorities, but we also look at what society deems as important. Decide what your priorities are. And then from there, set your goals. If you have your priorities and your goals.
Give us an example.
So if your priority is to your children's college education planning, if that becomes your priority, at what expense in a finite amount of money coming in can you make that happen? So you have your priorities, you have your money coming in, and your money going out. And once you know those three things on a regular basis, you can determine what's going to make you happy.
But you have to decide what's important.
That's the priorities.
Yeah, it's so interesting. I was watching one of these so-called reality shows the other day, and I'm embarrassed to admit that it was research. I was watching it for research purposes because that's what we do. So, and I watched this woman who was on one of the reality shows complaining that, and she's living in a very extravagant home, and she was saying, you know, I don't understand why we don't have money to send our kids to school. And I'm thinking, wait a minute. And she's talking about her Louboutins, which are, what do you think, for a couple $100?
Oh, yeah, easily.
More than that?
Yeah.
You're making a face.
Considerably more than a couple $100.
Yeah.
300-400?
Probably
8 or 9.
8 or 9.
Okay,
Yeah,
she talked about a Louboutin. She talked about this $10,000 table. She wanted all these things. And then she was complaining they didn't have money to send the kids. And by the way, they have all kinds of other financial issues. Here's my point. If sending those kids to school was the top priority, what should she be doing?
Well,
on her feet.
Exactly. I mean, you know, there's plenty of shoe stores that she could get reasonable shoes. And I agree with Michael. I really do believe that you have to have your priorities in order. And, you know, it's okay if the Louboutins are your priority, but then something else has to go. Then you cannot sit there and say, I can't send my children to school.
And who is she complaining to, by the way? Who is someone upset with if you're buying the nearly $1,000 pair of shoes? And by the way, it's not just about that goofy reality show. It's about every one of us who talks about our kids are our top priority, sending them to school, and then we do this other thing. We do that enough that we can't actually do that, right, Bill?
Right.
And then we go, hey, who do I complain to here?
Yeah, you have no one really to complain to. My wife and I got married. We had a priority of saving. Our first kitchen table was a folding card table and with matching folding chairs. My office mate came over for dinner. She was so embarrassed. She took us to a friend and we got their old pieces. But it's a priority call, right? It's back to the priorities. I agree 100% with that. You have to make saving in your future, your children's future, a priority. And take as much pride in that as you do granite countertops, right?
What's wrong with granite countertops?
Nothing. If you've saved for your future, if you save for your children's future, countertops are fine.
Someone says, by the way, the friends who watch us on a regular basis, you know who you are, and I try not to out you and embarrass you this way, but some of you have said you have to have granite countertops and then complain that you can't do other things. Bill's talking to you right now. He's talking to you right now. And some of you who also have joined country clubs on top of the granite countertops who can't do other things, Bill's talking to you right now. You're saying they should have a cardboard kitchen table at least. No, but seriously, in all seriousness, some of our friends who do this and they complain about it, it's a finite amount of money. Exactly. Is it not?
Yes.
But it doesn't that go back? You're contradicting yourself because you said you don't need a budget.
What you do, if you pay yourself first, that's sort of a budget, right? You say, I'm going to set aside 15% of my money. Now that's gone. Now I figure out how to live within the rest of that money, right? I can figure out how much I'm willing to pay for cable.
That's right.
I can figure out how much I'm going to pay. But I live within the rest. And I may not know exactly how much I'm spending on food or going out to eat, but I live within the rest after I've set aside that money first.
Got it. Is it like a food journal?
It could be. I mean, but just like a food journal scares people to look at what they've done.
But I want to lose 10 pounds. I want to.
Yeah.
But look at what you ate. I can't look at that.
Can't look at it. But the fear drives people in their direction, and to be able to put the fear aside, and go online and see what your transactions are, and on a daily basis make that decision about how you want to spend your money. And don't beat yourself up too much if it doesn't go your way because it's a long race. And that's why you set those priorities that are long-term priorities, and you work towards them. I think it's human nature to get discouraged easy. And when so much is on the line, sometimes it's just easier not to look.
Now we need to talk about debt. All right. So let's assume, for whatever reason or reasons, a lot of people watching, you have so much debt that it's all consuming. And it's not just an economic issue. It's beginning to affect the relationship, the marriage, stress and pressure with kids. It's consuming your work, all kinds of things, right? Best ways to manage, pay down, however you want to say, deal with your debt. Your thoughts?
I think...
Because I know there's no one way to do this. Go ahead.
Right. There's many ways to skin the cat. One of the things that I wanted to bring up is, talk to a financial advisor. There's a misconception that you need to have money to invest to speak to a financial advisor, and that's not necessarily the case. You can sit with someone that can take a look at what your finances are and put you on track as far as what your goals are in the future. How much money do you want to save for college tuition? Or any major big purchases. So, my thing, I think, to get back on track, you could sit down with a financial advisor, take a look at the interest rates on the credit cards that you're paying, and see if doing a debt consolidation loan would be,
But you may not know how to do it yourself. And Nova Debt is a nonprofit?
Yes, that's correct.
Explain that.
Basically, as a nonprofit, first of all, we will help people whether they can pay or not pay us.
Describe what your organization is and does.
What our organization essentially does is we provide free financial counseling and education, as well as housing counseling, bankruptcy counseling to anybody in need. So if you find yourself in a position where you are in that mounting debt scenario, you can speak to one of the certified financial counselors at our organization or organizations like ours, and they will walk you through kind of what your financial picture currently is and what steps you need to take in order to achieve the goal.
Where does your money come from?
Well,
you're a nonprofit.
I know.
I'm serious. Like, we're a nonprofit. We have to raise money.
Yes. Right.
How do you do it?
Well, fortunately, because of the services that we do provide, particularly the housing counseling that we provide, we do receive some federal grants, such as from HUD and agencies such as that definitely help support our cause. As well, I would like to think that we're mostly grant funded. We're out there, looking for grants.
But I'm curious about something. Are there certain people at certain ages that wind up with certain problems connected to debt that are the product of their ages, meaning the so-called millennials? Now, give me the official definition of a millennial. Millennial is what? What do we got age-wise? Mid-20s?
Yeah.
What's that? Is that same as Generation X, Gen X?
No, Gen X is more in your 30, end of your 30s, beginning of your 40s.
Okay, fine. So they got those two groups. And then you have older people,
baby boomers.
Baby boomers, who wind up in debt. Sure. Are they in debt for different kinds of reasons?
Absolutely.
Yeah. But what are you thinking about? I'm trying to figure out the bubble and what it's saying.
Yeah,
what do you got?
I think a lot of it is a factor of when we grew up and the influences on us at the time. The savings rate in the U.S. has gone down from 10 to 13% in the 70s, in the 50s, 60s, and 70s to less than half of that now. And I think the people that grew up in the Depression, in the war, they saved aluminum foil, they saved green paint. They did things, and that was ingrained in them. It's a gut thing. Baby boomers, less so. And children today, the millennials and all,
gotta have it.
Got to have it. It's much more consuming now. It's less a delayed gratification kind of thing.
So they wind up, say someone 26, 28 winds up with this massive debt situation, right? And it's not just from school. It's from the credit card they got when they were in some college because someone was on the campus saying, hey, got a good deal for you. You don't need any cash. Here's the deal. Kid didn't think it through. Now the kid owed $8,000. Now the kid's credit's at risk. What's that kid's options?
I think you have it right here. Go to a credit union. Go to Kim's organization.
But you can't do it yourself. It's very hard to pull it off yourself.
Cannot. cannot.
You need
There's-
professionals
I think there's
to do
that
this.
expectation that I can work harder, earn more, but you can't beat compound interest. It's always going to
You
work.
can't- Sorry for interrupting. You can't beat compound interest. Explain that.
So the way the interest is
I owe
calculated on
$8,000.
credit
That's
card.
it. I'll just work and I'll pay $8,000, but it's not really $8,000, is it?
It's not really $8,000.
What is it really?
When you look at the bottom of that statement, and it talks about how that money gets compounded, and it just moves faster. And maybe someone can explain compound interest better than I can, but it's a race to beat compound interest, and you can't. You're not going to have that earning capacity to accelerate that quick.
Wow.
You also need to know when to ask for help. Don't wait until you get to the point where you're barely living paycheck to paycheck. Know when to ask for help.
Well, I'm gonna throw this one at you because we have friends recently. My wife said to me, "Oh, so and so is going to declare bankruptcy," and I said, "Oh, really?" And she goes, "Jen, I'm sorry for doing this." She said, "It's not going to be so terrible." I said, "Why isn't it going to be so terrible?" She goes, "You know, they can just start over again." I said, "Really? They can?" I said, "So you think they can just start over again?" I said, "I don't know if it works that way. I think once you declare bankruptcy, people know it. You just don't, it's not that you just don't have to pay the creditors. I think people know it, and it has a significant, serious, detrimental impact. You want to start a business, you want to buy a home, you want to borrow, whatever it is. I think it's like a government who has like junk bond rating that can't borrow money." I don't want to say am I right, but am I right?
Yes.
Lourdes, why are you making a face?
I disagree because
She's
from a
right?
no, she's not right.
It's not,
I mean,
it's significant. I'm not saying you shouldn't, and if you have to file bankruptcy, that's what you should do. But it's a big deal.
It is a big deal, but what happens is that financial institutions and credit card companies make it seem easy for the simple fact you file bankruptcy, 2 months down the road, you will get a solicitation for another credit card from the same financial institution.
How could that be?
It is. I've seen it.
You are a clean slate.
Yeah, because you can't file for another 7 years.
And statistics show that
Right.
if you go into this after bankruptcy, you will pay on time.
Yes.
Because you are looking to overcome that bankruptcy. And so you will pay, and they're going to charge you 30% interest.
Absolutely.
That is
Whoa,
going
why
to be
30%? Because I had
that's your
because I
penalty.
experienced
Yes.
bankruptcy.
Absolutely. That's
So
their
wait a minute, hold on.
risk.
Wait a minute. One of the things that happens when you file bankruptcy is you pay a higher rate of interest on what you borrow.
Absolutely.
That's the risk.
Now, can you buy a house after bankruptcy? Sure, you could buy a
But
house
what?
after bankruptcy, but my mortgage may be at 4.32%. Your mortgage may be at 9% or 10%
Wow.
interest.
Because you're a greater risk.
You're a greater
'Cause
risk, the higher
those
the-
who file
yes.
for bankruptcy, greater risk.
Yes.
Not insignificant,
No, not insignificant.
but an option for some, and sometimes the best option. I just want to be clear.
Yes.
You talk to a financial planner, you talk to a professional. If that's the best option, that's the best option, but it's not insignificant. I'm sorry, go ahead.
No, that's fine. I think it's, while it is an option for some, it troubles me that people are going around saying, just file for bankruptcy. I mean, I have a
You're like me
visceral
on this.
reaction to that.
And what bothered me was not a big deal. Not that someone was filing for bankruptcy. What bothered me was,
Right.
come on. And I will also tell you what bothered me was from an ethical point of view. I thought to myself, wait a minute. What about all the people? What about the plumber? What about the contractor? What about the people they owed who now they don't have to pay, or whatever they pay? I don't even pay them pennies on the dollar. I don't even know what they pay, if anything. I thought there's something to that. No?
There's a learned behavior. So when someone goes right to bankruptcy, they haven't gone through to see where their finances are. They haven't gone through the steps to talk to the professionals, to learn where they went.
Yeah.
And then when you get to the end of the road and everyone agrees, listen, that's the only option. Now you come at it with a different perspective.
Sure.
But to start there, to think it's just going to be okay, it's false.
What about the idea of second mortgages to pay off debt? No?
I think this is probably where we're all going to have a different opinion.
Share your view.
I am not an advocate for taking a second mortgage to pay off unsecured debt, being credit cards. The reason for that is that when you borrow equity from your home, you always run the risk of something happening down the line and you being in a position where you're not able to pay it back. And of course, the end result being default on a mortgage, which can lead to foreclosure. if you default on the credit card debt, while it's not in your best interest as a creditor, there's a good chance that you're not going to lose your home over it. So because I think my dealings tend to be with individuals that are experiencing financial difficulties, we always kind of choose the path where it's safest.
You don't like the second mortgage?
I don't. I don't like using the equity.
What do you like?
I
I'll come back to you.
No, well, I would like to back up a little bit earlier and say, how do people get in debt and have to do the second mortgage? I think a good rule of thumb is don't borrow money for anything that goes down in value.
What? Give us an example.
TV. Don't finance a TV.
Don't finance a TV?
Don't finance
What are you going to pay cash?
Don't finance a car. If you can't pay for it, don't buy it.
Oh, come on.
Don't buy it.
Don't finance a car?
Don't buy it.
Countless tens of thousands of people watching. Are you kidding? Bill, how would they pay for the car?
Sam Walton. You know what Sam Walton, the founder of Walmart, you know what car he drove all his life? 1985 Ford pickup. He could have bought a car company, but he drove a Ford pickup, an old one.
And so you're saying?
Buy what you can afford.
You say?
A little oversimplified, to buy what you can afford. I think when people run into credit card problems, it's easy to get that check from that second mortgage to say, okay, now I can sleep tonight. But did you go back and look at how you got to where you were? That learning process will determine what you do when everything starts the next day and you've got those cards paid off, which now you have very large lines that have nothing on them.
Lines of
credit.
Got it.
And nothing on them. So now, you know what, I went through a lot. I deserve to start to replace the TV that I couldn't get the last 3 months. And so there's a place for it, but it becomes much more expensive once you bury that debt into mortgage payments.
That puts things in perspective. Lourdes, add something.
Well, I think that as long as you don't exceed, from a financial institution, we will not loan 80%, more than 80% of the loan to value. So, before you file bankruptcy, before you start falling behind on your credit cards, if you have the equity in the home, you can take the second mortgage and it could possibly be tax deductible. You would have to check with your accountant, but
you're not totally against the idea.
No, I'm not.
And by the way, rebuilding it. By the way, you're right. There are different points of view on this. Rebuilding your credit, right? Credit unions help in what way?
In a number of different ways. We have products. There's a product that we call Borrow and Save, and it's not only to reestablish your credit if you file bankruptcy, but it's also to help you create credit if you don't have credit. We also help with financial literacy. We actually partner with Kimberly's.
Her nonprofit.
Yes, and
teaching about
we
literacy,
also have
about educated finance.
Right. We also have financial literacy programs, modules on our website, and they're not only for, the Gen X or the millennials or the baby boomers. They're also modules for kids in grammar and high school, because you got to get them young and teach them the value of $1, learning how to save.
Last question before we get out of here. Why is money such an emotionally charged issue that so many of us have a hard time talking about it? You know what I'm talking about.
Yes.
A couple minutes, let's go.
It's a cultural thing. Other countries, cultures, Brazil, and they talk very openly about their incomes and things like that. We just don't. And I think
it's taboo, isn't it?
It is.
It's tacky. Some people say it's tacky you talk about your money. Talk about your money issues. Talk about what you have, what you don't have, what you want, what you're looking for. Money, talking about money is tacky, taboo, right?
I don't think so.
But in a lot of people's minds it is.
I think what you're doing here with this show, talking about it, us all speaking and people watching, what we're doing at the Coalition, where there's 1,000 points of interface when it comes to talking about money. You don't have to talk about your money. You can talk about other people's scenarios. But just hearing the stories, what other people have done, inspires you to manage your money a little better. I think the fear is always there. What's interesting, I meet more 20-year-olds and younger who don't have credit cards, who are on check cards only, on a cash basis. They're scared to death what they saw their parents go through.
That's a good thing.
It's a fantastic thing because of the education we're all doing. It's all coming together. So I think we're going to see a change in behaviors. Those who are where we are, the way we were raised, that's what it's going to be.
And it's not like if you ignore this and you build up this debt and you have this sincere, look, I'm not going to make too much of this, and you all know what I'm talking about. It does affect people's relationships.
One of the number
It
one
really
causes
does, right?
of divorce. Absolutely.
Say that again?
One of the major, I think it's number 2 on the list of causes for divorce in this country.
Money issues.
Money issues. We deal with it. It's funny. We often talk about how we are, well, we are emotional counselors and financial counselors because of how impactful.
Let me just say this. This is an important topic. It is not just about money. It's about what money means in our lives. And you've all done a tremendous public service. And I want to thank you for putting money in perspective. Thank you so much.
The preceding program has been a production of the Caucus Educational Corporation, celebrating over 25 years of broadcast excellence, and 13 for WNET, NJTV, and WHYY. Funding for this edition of Caucus New Jersey has been provided by New Jersey's credit unions, Felician College, Virtua, NJM, Horizon Blue Cross Blue Shield of New Jersey, Community Education Centers, and by New Jersey Sharing Network. Transportation provided by Airbrook Limousine, serving the metropolitan New York, New Jersey area. Caucus New Jersey has been produced in partnership with TriStar Studios. This program has been made possible in part by the Kessler Foundation.